afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. The main event this week was the two-day G20 summit in Japan. It became even more significant as the week progressed, as the US announced that it was adding more Chinese technology companies to its trade blacklist over national security concerns. Unfortunately, this is likely to complicate trade deal negotiations, which we had initially hoped would restart after Donald Trump and his Chinese counterpart agreed to meet with each other at the G20 summit. As this backdrop and tough guy posturing is unlikely to result in a productive meeting, optimism faded and global equity markets ended the week broadly flat. Hopefully the meeting will be more than just a handshake and fake smile for the cameras, but the best outcome we can hope for now is a truce allowing trade talks to restart. However, bad news can be good news, and should the meeting yield little or no progress on trade tariffs, it is likely to quicken the pace for the major central banks to cut interest rates and loosen monetary policy and spur China into pursuing further strong stimulus measures. Therefore, any negativity coming from the G20 is unlikely to significantly knock equity markets. Adding to the cautious tone were Middle East tensions, which remain elevated despite the lack of military action last week as Donald Trump imposed sanctions on Iran's supreme leader. However, these are in reality more symbolic than significant. And finally, it was a quiet week for economic data. Eurozone economic confidence declined to its lowest level since August 2016, thanks to trade tensions, which is weighing on business and consumer sentiment. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.